I love the old value and definition of the dollar, but the current value and definition of a dollar scares the crap out of me because our dollars could be worth a lot less at the snap of a finger, and it's happened many times in history. I'll talk about this in just a couple minutes, but let's first start with the old definition and value of the dollar. The US Coinage Act of 1972 defined a dollar as 371.25 grains of silver. I love that definition. It's precise, it's exact, and I know exactly what I'm getting when it comes to my dollar. The value of the dollar stays constant, and inflation is generally not a factor when we do this, as seen through countless times in history. My dollar is 371.25 grains of pure silver, and it's going to be that same value tomorrow, next month, and next year. I don't have to worry about my dollar losing value. So let's look at the current definition of the dollar. The Cambridge Dictionary defines it as the standard unit of money used in the US, Canada, Australia, New Zealand, and other countries. Okay. The Collins Dictionary defines it as the same thing, but adds, a dollar is divided into 100 smaller units called cents. Alright, so what's a cent? Well, many dictionaries define 1 cent as 1/100th of a dollar. Okay, great, but what's the value? So I searched for the actual value of the dollar, as this would surely help me get a more precise definition. The first result is a currency exchange calculator. Not really what I'm looking for. The next few results contain a few sites that give me inflation calculators to help me find the value of the dollar. One of them says, find the US dollar's value from 1913 to 2023. Now, the first thing that stuck out to me here was that I had to use a calculator to find the value of the dollar. That's pretty ridiculous. The second thing was the start date of 1913, which is the same year the Federal Reserve was created. Coincidence? I think not. More on that in just a moment. We also had more inflation calculators and articles about the fluctuating value of the US dollar. And the funniest one is a result from the Federal Reserve titled, "A Dollar's Worth, Inflation is Real." Now, that is funny. We aren't going to go down the rabbit hole of the Federal Reserve too much in this video, but I at least want to bring it into context for you if you're unaware. The Federal Reserve is not federal, and there are no reserves. This means the Federal Reserve is not a part of the government, and the Federal Reserve banks are set up like private corporations. And let me make one more major correlation so everything is clear for you. On a fiat money system with nothing backing the currency, debt runs wild due to endless money printing. The money printing is possible because there's nothing backing the currency, so money can be created at the snap of a finger. With something backing the currency, this isn't possible. And this is the important part. When there's lots of debt, there's lots of profits for the banks because of interest payments. That is one of the main reasons the Federal Reserve Act was created in 1913. Remember, the Federal Reserve is the central banks. It was no accident that we were taken off the gold standard where something of value was backing our dollar. They want a fiat currency because they don't want the money supply constrained, as this means their profits are constrained. Not only do the banks profit massively from debt, but with nothing backing the dollar, inflation is possible. This is on purpose. Inflation is the hidden way to tax the public without them knowing. The banks profit massively from the interest payments from debts, and the politicians don't have to tell the voters they need to raise taxes for certain things. The citizens secretly get taxed through inflation. It works out on both ends. The banks are happy, the politicians are happy, yet the people get screwed, although most don't even have any idea what's happening because they don't understand it. And I love how that article talks about inflation being real coming from the Federal Reserve, who is one of the main causes of inflation in the first place. The same people that try to fix inflation, quote unquote, are the ones that cause it. How convenient. Anyways, let's get back to the definition of a dollar. Google wasn't giving me an answer I was satisfied with, so I turned to one of the most advanced AI tools that is available to the public, and that's ChatGPT. So I asked ChatGPT what the definition of a dollar was. You can see the full answer on the screen, but in short, ChatGPT told me that a dollar is a unit of currency used in various countries around the world Then it talked about its symbol and how the value can vary in different countries at different times. Okay, so the value of the dollar changes. Could you imagine if other metrics changed like the dollar does and how chaotic things would be? When you're cooking, what if a cup wasn't always a cup? Sometimes a cup is actually 2 cups. Sometimes it's half a cup. And depending on various factors, it could actually be 10 cups. That will result in some pretty lousy meals. Or when you're taking your medicine. So sometimes 10 milligrams is 10 milligrams, but sometimes it's 5 milligrams, and sometimes it's actually 20 milligrams, although when things are really off, it could actually be 200 milligrams. That will result in a lot of unhealthy or even dead people. Oh, and by the way, 6 p.m. isn't always 6 p.m. Sometimes 6 p.m. is really 4 p.m., sometimes it's 8 p.m., and sometimes it's 4 a.m. Good luck getting anywhere on time. Can you imagine how things would be? I can't think of anything that changes value like the dollar does. Of course, I wasn't pleased with that answer, so I dug deeper. I said, the value of the dollar used to be determined at 371.25 grains of silver. How is the value of the dollar determined today? ChatGPT gave me a 3-paragraph answer, which you can see, but I want to focus on the part where it says it, being the dollar, is backed by the full faith and credit of the US government. This means that the value of the dollar is essentially a measure of the world's faith in the economic stability of the US government. Now we are getting somewhere. But I just want to make sure I understand something here. Are you saying that the value of the dollar is based on faith? So I asked. So basically you're saying that the value of the dollar is based on faith on the government and the currency? You can see the full response here. Yes, that's correct. The value of the US dollar, like most modern currencies, is based on the faith and trust in the stability and creditworthiness of the government that issues it. This is a characteristic of fiat money, which is currency that a government has declared to be legal tender, but is not backed by a physical commodity. The value of fiat money is derived from the economic stability and the creditworthiness of the government that issues it. Other factors like economic performance, interest rates, and geopolitical stability also influence the value of a currency. Wow. So let me be clear on one more thing. I asked ChatGPT, give me a simplified answer. If people lost all faith in the US dollar, would that mean that the US dollar basically would lose all of its value? ChatGPT says yes. In simple terms, if people around the world completely lost all faith in the US dollar, it would essentially become worthless as its value is based on trust and confidence in the US government and the economy. This scenario is highly unlikely, but a complete loss of faith would lead to a collapse in its value. So the value of our dollar is completely based on faith and confidence. Nothing physical. We're talking about faith and confidence being a store of value. I don't know about you, but that doesn't give me much faith or confidence. As far as this scenario being highly unlikely that a complete loss of faith would happen, I have to concur on that one. There's been thousands of fiat currencies and none have ever succeeded. They always end up failing. It's always the same cycle. An empire starts with a stable economy because the money is backed by a commodity, usually gold and silver. As the empire grows and expenses grow, the empire starts to slowly move away from the backed money. This happens with debasement of the currency, lowering reserve ratios, and other maneuvers. Eventually, the currency is backed by nothing, turning it into a total fiat currency. It's printed more and more, inflation goes through the roof, and eventually the currency collapses. This has happened over and over and over again throughout history. We are currently at the latter stages right now. You can see that with this graph of the history of the US national debt. We had sound money for a long time. We were on the gold standard, which means our money was backed by gold. The Federal Reserve was established in 1913, and this is when everything started to change. By 1944, Bretton Woods was established, where the US dollar was pegged to gold at a fixed rate of $35 per ounce, and other countries' currencies were pegged to the US dollar. The major issue was having gold at a fixed rate and no reserve ratio. This meant the US was printing much more money than they had gold. They got found out, people started asking for their gold, and the US ended Bretton Woods in August of 1971. At this time, the whole world went on a fiat currency system. As you can see from the national debt graph, 1971 was when our debt started to go through the roof. And hopefully it's obvious why by now. It's because there's nothing backing our dollar. So the Fed can basically print as much money as they want. The scariest part is that over 1/4 of our debt has been established in just the last 4 years. Over $8 trillion of debt in just the last 4 years. It took 215 years to get $8 trillion of debt from 1790 to 2005, and we just matched that number in 4 years. That means our debt is growing exponentially. In layman terms, our debt is growing at a quicker and quicker rate. This mimics history of every other failed fiat currency. Remember, a fiat currency has never succeeded. And we are currently at the last stages where the debt is growing at such a quick rate that the system ends up breaking. The good news is that when this happens, wealth is not lost, it's simply transferred to those who are positioned correctly. I recommend you go to investingingold.com/quiz and take our 30-second quiz to help you find the right precious metals company for your needs. All recommended companies are highly trusted by Tim and I, as we have over 30 years of combined experience in the precious metals industry. Take the quiz, connect with the right company, get their free kit, educate yourself, and get prepared for what's coming. Although I look at what's currently going on as scary, I also look at it as partially exciting. I think it's scary because a lot of people are going to lose and lose a lot. Most people are actually going to lose, and again, lose a whole lot. But it's exciting because I believe there are going to be massive gains by those people in the right positions. Make sure you like, comment, subscribe. We'd love to hear from our viewers. Catch up with you soon.